Markets go up and they go down, but you know that. Let's get into the good, the bad, and the ugly. The Alternative Investment Hour starts now.
So given it's the new year, Jeff, what does everybody like to talk about the beginning of the year?
Resolutions. Resolutions.
So the market, I guess the market was crazy volatile in December. Did you know that?
You called that.
Absolutely crazy.
I think it was off. I was reading this morning. Was it off 9% in the month of December?
A little more than that, but the market ended up being down last year 6%. But we saw a 20% correction.
Okay.
Is that crazy?
Starting off the new year, I concur with you. Starting off the new year and seeing what just happened in December and so many unknowns in the world, and we can get into that later if you want to. It really is a good time to take a look at an alternative.
And I'm so confused. Jack Bogle, founder of Vanguard, they invest money. Here's what they say.
Vanguard's a pretty good sign. Are they the biggest?
I don't know if they're the biggest, but I think they have $5 trillion with a T. Well, here's what he says. Invest in 2019 with a little extra caution.
What?
What you just said is one of the most insanely idiotic things I have ever heard. Everyone in this room is now dumber for having listened to it.
The people that are in charge of taking your money and putting it into the marketplace, the experts, are telling the people that they're managing their money that they need to be more cautious.
Crazy, isn't it? I just don't know what that means. I don't know what being more cautious means. And everything that we see, it says the 6 steps to get ready to handle a bear market, the 5 steps for retirement. Do you know what none of them talk about?
What?
Not losing money.
Not losing money. I'm sitting here. I want to go back to your statement. When you say more cautious, but you take your money, you put it in the public markets, you have no control. How can you be more cautious? I mean, that makes no sense to me.
Well, in their response, it was this. Drop your equity allocation. So
quit investing in stocks.
Quit investing in stocks and move it over to bonds. But yet, we're at historic low interest rate yield.
You know what's crazy?
What's that?
If you look at all of 18 and the volatility up and down, not only with the markets, but with what's going on in other parts of the world, our distributions, we made one every month last year, didn't miss a distribution, and they didn't vary 1%.
Isn't that crazy?
And so while people do have some money in the market, do have to worry about whether it's stocks or bonds, this is one place they can put their money and they can count on that distribution every month. And you know what? The underlying value of the assets we had went up.
So how about this? How about we just, and they don't talk about it because they don't have access to strategies like this. How about you open your mind to something new? How about you open your mind to a strategy or strategies that have some built-in principal protection?
Money never sleeps, pal.
Amen.
But what we hear constantly is, I want to give you a piece of my portfolio.
Mm-hmm.
That piece may be 20%, it may be 80%. But when they know that we're not going to be down their throats saying, we want 100% of your money,
right?
All of a sudden, I can just see the air, just a sense of, okay, fine. Now I can start thinking about the merits of this investment rather than being sold something. But if you want to learn more about anything that we're talking about, how to reduce portfolio volatility, how to make money when the markets are down, a couple ways to get a hold of us. Text PROTECT to 474747 or visit the website alternative. It's www.altinvestmenthour.com or call us 833-ALT-RADIO.
You've been listening to the Alternative Investment Hour. Investing is hard. Harder if you only have one strategy. Stay with us. Jeff Johnson and Robert Kuhn will be right back.